How's it, guys? Welcome back to Paradime Flip. Hope you're all doing well. So I am starting a new course based on market structure, and at first I wanted to create a single video around the topic, and it was going to be saturated with information, but this wouldn't really benefit anyone because the average attention span of a human is only so much, and they probably would be tired halfway through the video, and they wouldn't really be able to digest all the information. So instead of doing that, I decided to do a beginners to advanced course, and hopefully this will also benefit new traders coming into the market. And the video content will entail bite-sized videos, right, around 10 to 15 minutes long, and this will be more beneficial for you guys because it's going to actually give you a step-by-step guide through the topic of market structure, and it'll be easier for you guys to digest the information and follow through with the teachings. Okay, so without wasting any time, let's get straight into it. So in this lesson, we're just going to go over the basics, and and using market structure helps you identify a trend effectively. Okay, and if you're a trend line trader, a lot of issues that you may find that you have is drawing a trend line, right? You're always going to have to adjust the trend line every time the trend line breaks, right? You're always going to have to adjust it, right? And that's fine, okay? But we all know the market is not perfect, right? In terms of the strategies that we apply to it, okay? But using a market structure approach is more beneficial than using a trend line. If you can combine the two and it works well for you, that's very fine. Okay. But the basic idea about market structure is to effectively or efficiently identify trend. And this is important because if we can identify the trend correctly, okay, we have a high probability of knowing which direction to trade, right? So that's going to give us direction, and it's also going to give us key levels to time trade, right? So it's going to give you key levels for entries and to time your trades, right? So for all these reasons, right, market structure is important, okay? And the basic idea about market structure is being able to identify highs and lows, right? So in an uptrend, okay, what you'll notice is that the market makes impulse moves, right? And we get resting phases, right? These are your pullbacks or your correction, okay? And after this phase, right, we expect the market to make another impulsive move in the direction of the first impulse, okay? And as the market is doing this, it is forming a series of higher highs and higher lows, right? So you have a higher high, right? And you have a higher low, right? And all a higher high is a high, right, that's higher than a previous high, okay? And a higher low is a low that's higher than a previous low. So if we just continue this, right, higher high, you can see this is a higher high because this is a high that's higher than a previous high, right? And we then get a higher low, and this is a higher low because it's a low that's higher than a previous low. And this goes on, right, until a point, right? So this is going to go on until a point where price breaks market structure, okay? And from this point, right, we now have a potential lower low, right? And from this point, right, we can expect a pullback, okay? And we will be expecting the market to make a higher low, right? And from a higher low, we'll expect the market to go down to a lower low, right? And we'll expect this sequence to continue, right, until such a point where the market breaks a swing point, right, and we begin to make higher highs and higher lows again. Okay, and the basic idea, right, is that when we're in an uptrend and we can see the market is clearly making higher highs and higher lows, right, we want to trade with that, right? We want to continue that. So we're going to make the assumption that this is going to continue to happen until a point where we see that it's no more happening, right? And whenever we get a higher high, you want to wait for the market to pull back, right, to a level, right? It could be a support level, okay, right? But the idea is that you are expecting the market at some point to form a higher low. And when we see that higher low forming, right, we can expect the market to then trade higher to make a new higher high, right? And you are trying to catch the trend, right, in that situation. And basically, right, within these areas, right, within these trends, right, we can expect market structure of a lesser degree to form, right? And this occurs because the market is fractal in nature, and whatever we see happening on a large scale, right, we should be able to see happening on a lower scale, right? So within an uptrend, right, we will also find that the market makes a series of higher highs, right, on a smaller scale, right, and higher lows, right, to a lesser degree. And as we're pulling back, right, this is deemed as a downtrend on a lower time frame, right, that is making a sequence of lower lows and lower highs. Okay. And this concept is important, right, because this can help you time your trade. And if we just come to the right over here, right, let's say we are now in a position where we are at a higher high and we are now expecting the markets to make a higher low, right? If you go on a lower time frame, right, and you are monitoring the minor trend, right, or the micro trend, right, of lower lows and lower highs, right, you are going to actually wait or use this to time the uptrend continuing, because once we get a break of structure, right, on this micro time frame, right, and we wait for a higher low, right, on a lower time frame, right, we can assume that this lower time frame trend has now turned up, right, and we can trade this lower time frame trend in the direction of the larger trend, and we can make the assumption, right, that we can get this continuation higher, right, which will basically complete the larger trend, right? So we can assume the larger trend will continue, right? And you are going to find your entry on a lower time frame also based on market structure, right? So you can actually use market structure not only for levels, right, but to determine the timing of a trade, right, based on the overall larger market structure. And that's as simple as market structure gets. Now, if we just look at Euro USD, we're on the daily chart, right? And if we look at the market structure on this time frame, right, you will notice that in an uptrend, right, we indeed do get those higher highs and higher lows, right? And then you'll notice from this area here, we'll be anticipating price to make a higher high, right? But in order for us to make a higher high, we'd need to break the swing point. But price doesn't do that, right? Instead, we reverse, right, and trade lower. And we actually break the lower low, the higher low, right, of the uptrend. Okay, and it's at this point where we actually make a lower low, right? So at this point, we can assume that market structure has been broken, right, to the downside. And it's at this point where you'd be looking for the trend to now have changed, okay, and you'd be expecting price to then go ahead and make a higher low, right? So it's at this point, right, that we can expect now the markets to make lower lows and higher lows, right? So since we have a lower low in, we'd be expecting the markets to then pull back, right, and make a higher low, right? And we can expect the markets to continue doing this, right, until a point where we break structure to the upside, right? Right. And within those larger trends, right, you have these smaller trends, okay, right? And that is structure on a lower time frame, right? And it's these lower time frame structures, right, that are going to assist you in timing your trade, okay? So when you get a larger time frame structure, right? For example, right, if we were looking at this move higher, right, and we get this pullback, okay, we know that at some point we are anticipating the markets to make a higher low, right, to take out this high, right? And it is based on the lower time frame structure that we can start doing that. So it is when price breaks structure on a lower time frame, right? So if we're looking at the green structure, the green time frame structure, right, the most obvious swing would be this point based on what I can see here, right? So when we break that structure, right, it's at this point where we can now expect, right, the continuation higher. Okay. And as you can see, right, these structural swing points also provide support and resistance levels that you can key off of, right? So that's going to help in your timing. Okay. And once you get this pullback, right, you can expect or anticipate the pullback, right, to bounce or reverse off these levels. It doesn't have to, right, but it does do it often. Okay. And you can expect that to hold. Okay. And even if you zoom in on a lower time frame and also at this level, right, look for that same sort of setup, right, within that green trend, right? So let's assume here, right, that we are here in green, okay, and we get this break of structure, right, and we get this level, okay, so we are basically zooming into the green structure, right, that we're analyzing at this point here, okay, and we are getting this pullback, right, and we're expecting price to reverse at this level, okay, you can actually go deeper on a lower time frame, right, and analyze the structure on a very granular level, okay? And when we get a break in that structure, right, we can further time our trade, okay? And this can help us, right, actually catch the larger trend higher, right? And you basically want to be trading in the direction of the larger time frame trend. You don't have to, right? Because there are many setups on these pullbacks that you can actually take on a lower time frame, right? But you need to understand, right, the broad market structure so you know which direction is most likely to have the biggest moves, right? Not to say that you cannot take any trades against the larger trend, right? But you just need to be aware of where the larger trend is going, okay? And basically, as you study this and as you practice it, you'll get developed in your understanding of market structure, right? To then be able to navigate the markets better, right? However, this is only the basics, okay? And we actually need to go deeper if you actually want to be the trader that you want to be, because just using this alone is not going to cut it, okay? So we need a deeper understanding, and that's what we're going to be developing as we get through this course, right? So having said that, that's the end of the first video, right? In this video, we basically just covered the basics, right? And if you like this video and it added value to you, please like and share, okay? And if you like the content I produce on this channel, and if you are also looking forward to the future market structure videos, please subscribe so you can stay notified when I release the videos. And if you're looking for a trading community, you can check the link in my description, right? I also have a analysis group chat where I post my analysis, right? The link will also be in the description below, okay? I mentor, right, for free. I don't charge for mentorship. Okay, so if you need help in your trading, you can join the group and I'll be glad to assist. Okay, and I hope that this added value to someone, and I hope to see you in the next video. Until then, stay safe.